Laurent, thank you for joining us.
My pleasure.
I wanted to start talking about the broader economic backdrop in which you operate. This morning, we heard from your chief economist, who described his outlook as a bit pessimistic in the short term. Is this something, a view that you share?
Yeah, well, we are in a slowdown, and we think, it's going to get a little bit worse in the short term. We have to keep an eye on an evolving labor market. September numbers were a little bit stronger on both sides of the border, but we think it will weaken over the next little while. I think there is still some economic pressure from monetary policy that is still restrictive. So rates are starting to come down, but that's going to take a bit of time. So we don't see before, short-term rates get to the area of around 3%. We think that it's going to, we're still going to see a bit of a slowdown in the economy. And
are you expecting rates to start dropping as soon as next week? Is that sort of the beginning of the next phase?
I think that's a very big possibility.
Okay. How do you see that rate outlook impacting the bank?
Well, the obvious headwind for financial institutions when short-term rates go down is the impact on deposits.
Yes.
And so that's, a bit of a headwind for all institutions, including us. Having said that, we don't base our strategy on where rates are going, and we've been through many rate cycles, economic cycles. So growing the bank and we have a very diversified business mix. So it's a bit of a headwind, but there are other businesses that, could do well. It could, help loan growth. It's always a good thing also for capital markets activity as well. Shorter term rates will come down, but we believe, and I believe, that longer term rates will remain where they are, and potentially we'll see a steeper yield curve by the middle of next year, towards the end of next year, and that's typically good for banks.
So you brought up loan growth. I was hoping you could speak a bit about the state of the Canadian consumer's financial health and what you're seeing in terms of your credit exposure.
So absolutely. Higher rates impact more consumers in Canada because of the nature of the mortgage market. So they have been, because our mortgages renew every 5 years, impacted much more than U.S. consumers with mortgage payments. So we've seen a shift in behavior, definitely. But
how? Can you elaborate on that?
So discretionary spending is down significantly in a lot of areas. We're definitely seeing a lot more usage in unsecured credit. If I look at, which is small exposure for us, but if I look at our credit card portfolio from the low during the pandemic, because people were flush with liquidity, to today, it's up 30%. So people are using a lot more credit. But the structure of the market in Canada is such that there's general recourse to real estate for banks. So people are pay their mortgage, and so they adjust their behavior, their consumption accordingly. So I don't see, when we think about the mortgage market, I don't see any crisis looming in Canada because of the nature of the market.
Yeah, it seemed like there was a lot of angst about the extent to which stress with the consumer was going to flow through to the banks, and now is there a little bit the feeling that that was perhaps overblown in terms of the impact across the financial landscape, or what do you think?
Well, I think we've demonstrated after this monetary cycle that the resiliency of the consumer is pretty strong. Delinquencies are up. There's, there are, depending on the products, depending on the region, depending on, the size of the payment shock. So we are starting to seeing a normalization of credit, which was totally abnormal during the pandemic. But nothing, I would say, better results than what was anticipated.
So delinquencies peaked then, and as we start to see rates come down?
I think we're in the middle of a credit cycle. and I think that we still have some ways to go. Have we reached peak? I think we're going to be hovering around higher levels and sort of levels that we have seen towards the end of this fiscal year in the industry in terms of provisions for credit loss. So I think those remain elevated for next year.
You brought up the mortgage market. Could you share what you see happening overall in housing going forward, and how is that going to impact?
There's an imbalance in Canada. We're not building houses fast enough. There's also an imbalance between we have condos and we need more rentals. So there are too many condos, not enough rentals. And there's also an issue with affordability. So those things take a long time. They're not solved within a year. It's a generation, so 10 years for sure. So one of the things that we've done is focus our commercial real estate portfolio on multi-residential construction, and we've allocated a lot of capital and funding towards that. And I think that's what we should be doing is support as much as possible the build of residential.
What about in terms of prices? Unless I'm mistaken, I think we've started to see a little bit of more listings. I mean, why do you think, who's starting to sell, and do you see any of these sort of supply and demand imbalances?
Nothing out of the ordinary at this point in time. I think that we could see a pickup in activity towards the middle of next year.
Why?
We have rates coming down. We also have mortgage rules that have been changed, so we will allow 30-year amortization for new home buyers, and we could you can insure for our first home buyers up to $1.5 million in terms of a cost of a house. So those are things that are, I think, going to impact, but I think everyone is anticipating rates to come lower. So we're going to see, I think, a pickup towards the middle of next year.
Got it. Wanted to zoom in a little bit on the bank itself. Could you speak? I mean, what do you see driving growth over the next year? Which parts of your business?
Canada's our playground. So we're a Canadian bank, Canadian focused. Our core banking, P&C, wealth, it's focused on growing in Canada. We have a strong presence in Quebec.
Yes,
and
headquarters too, I believe.
We are headquartered as well in Montreal, and we see a lot of opportunity to grow outside of the province. I've been in place for 3 years, and we've put a lot of emphasis on growing outside of the province. And when we look at our loan growth, specifically in commercial banking, it's depending on the quarter, sometimes 25% to 50% higher outside of the province of Quebec. Now from a lower base, but it's still a beginning. So that's our focus. And the other part of our business is, when we look at outside of the country, we remain very targeted. So here in the U.S., we pick and choose where we want to be active in capital markets, where we think we can be relevant and make a difference. So renewable energy is one of them, where we have a very big focus here. We have the expertise, so we feel like we can be competitive. And so Canada's our market. When we get outside of Canada, let's make sure that it is accretive to returns and ROE.
We'll come back to that, maybe a lesson for some of your peers. But as you said, I mean, you are very much anchored in Quebec. I'm just wondering, how much have you benefited from the relative stability of Quebec's economy?
We have. The Quebec economy is in general less leveraged economy because of the house prices are much lower. If I look at one interesting data that I like to bring up, the variable rate mortgage product that we have, at the peak, the impact on the payment shock in Quebec was $600, so the delta. In Ontario, for our clients, it was $1,200. So less leverage, small, house prices that are much lower, definitely has been a support, I would say, in general for our performance. Well-diversified economy in general, and I think more conservative, I would say, than the rest of the country in general.
Now, I know you're excited about your CWB acquisition. I was hoping you could just share with us a little bit of an overview on why you see that being such a good thing, but also if you could give us an update on where we stand in that approval process.
So a couple of weeks ago, we got the approval from Competition Bureau. So within 4 months, very happy about that. We have to finalize our documentation for our regulator, which will be done in the next couple of weeks. And then it goes to Minister of Finance. And so we hope that everything is on the desk of Minister of Finance by the end of November. And close date early 2025. That's what we're working towards right now. Very excited about the transaction. Very excited.
Why?
Because it's a significant step forward for us in expansion outside of the province of Quebec and PNC. It's always been a bit of a struggle. It gives us a sudden foot on the ground. It multiplies by 6 our physical presence out west. It's exactly on target, on strategy. It's commercial banking that we understand, that we have an expertise in. And culturally, we are extremely aligned.
Well, that's a question I had for you, which is, I mean, you are talking about combining an institution that's very much anchored in Alberta with your Quebec. I mean, those are 2 distinct cultures. How are you thinking about integration there?
Well, we believe a lot in local leadership. We believe in the culture that we've been promoting, which is an entrepreneurial culture. And the past 2 years, we've been speaking together. And the most important thing for us was that connection. And National Bank was created by entrepreneurs, and CWB was created as well by entrepreneurs who had a hard time getting funding. And so there's at the base we're very similar. In the discussions that we were having over the past 2 years, we saw quickly that our values, the way we approach clients, the way we manage talent, the way we view growth was extremely similar. So that was very important. It was important for management. It was very important for the board of CWB. And it's an honor. It's an honor for us when the board of another institution says, we want to deal with you. We want to, we think that our future is with you. So that's, we spent a lot of time on that. Numbers you can make work.
People are more complicated.
Yeah, and I know you're going to bring up, well, the language is different, but we can communicate in English as well.
Like here, exactly.
Yes,
yeah. Well, I said I would come back to the question about the U.S. versus Canada. I mean, as you look forward, obviously you haven't yet closed this acquisition, but you're very much relying on Canada to drive the bank's growth. Many of your competitors have felt they needed to look south to the U.S. I mean, how do you feel about that? Will you ever be tempted to shift your focus a bit?
We won't change our strategy or our approach. So if there are businesses that we know we have the expertise, that we do really well in Canada, and we want to take part of the market here in the U.S., we'll do it. For instance, structured products in our capital markets business is a business that we've built the expertise for the past 25 years. And this year, we sold more products in the U.S. than in Canada. So if there are businesses that we can export and that are accretive to returns, we'll do it.
Great. Well, thank you so much for your time. Pleasure to have you here.
My pleasure.